Good morning, everybody. Happy Wednesday. Hope everyone can hear me well. And then we are able to get started here in just a second. And thank you all, everyone, already for giving us a thumbs up like on the video. I see a lot of you guys are doing that already, so that's perfect. So thank you for doing so. Let me just check one thing. One second. Alrighty. Perfect. Thank you all. I appreciate it. Let's get started. So for those of you guys that are here for the first time, thank you so much for being here. I'm Serge Berger from thestudytrader.com. This is our morning call, and we're going to spend the next 10 to 15 minutes together going through the markets, going through really what I consider to be some of the more important things to be looking at here using our notepad. If you haven't done so already, please give us a thumbs up like on the video, leave a comment, and of course subscribe to the channel right now. So I want to start off actually just more broadly, more specifically actually, let's start that way, with the broader indices, what happened yesterday. And then I want to go into a couple individual pockets of the market. I want to specifically look at CoreWeave, which is the stock that you're looking at. I'm hearing more and more concerning chatter from a positioning perspective from some of the funds that I talk to. And then I want to look at... I do want to spend a little bit of time on healthcare, and behind the paywall, our members of ETF Silo Pro and other products, they have been benefiting from us adding more healthcare exposure over the past couple of weeks or so, which has now really been outperforming. So I'd like to show you that in a minute. So let's start off. Before we get to this stuff, let's go into a little bit more into the details. What we saw yesterday is it's nothing dramatic, so by all means, this is still very much a tech-driven market. But we, for the first time in quite some time, saw quite a bit of relative underperformance by mega cap tech. Yesterday, the NASDAQ 100 was up, 27 basis points or so. And if you look at that from a metrics perspective, the best way to look at it, if you guys can see down here, this little this little square, it's got a bunch of green and red boxes. You can see yesterday where the performance came from and where it didn't. So basically, large cap value stocks, so that's a lot of that's like the Dow, for example, really was the leading, game yesterday. Whereas large cap growth, which is basically your NASDAQ stocks, underperformed. You can look at that on the equity sectors as well. You can see you had consumer staple stocks up 1.3%, energy stocks up 1.3%, a lot of value there, and again, tech down 90 basis points. So we're starting to see some of that. As you will find out, though, it's just going to be mathematically a near impossibility for the S&P 500 to, even if all of that continues, for the S&P to go meaningfully higher. It can go higher, but it'll be going higher at a very slow rate unless tech continues to lead. And that's the, that sort of issue, if you will, that I think a lot of people are going to find out before long, that everyone owns too much of these mega cap tech stocks, not because they're bad companies, but because the index construction has moved in that direction. So I wanted to point that out to you. So that's that. The Dow, of course, yesterday in the back of that made a fresh all-time high. That's right there, you can see up 1.2%. So we call these styles. Maybe you've heard this before. So the equity factors or styles. This is not sectors, but styles, right? So growth, value, blah, 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 that kind of stuff. So a whole sorts of other things in there. That really yesterday was led by the large cap value parts of the market. Okay, so that's point number one. The second point I would like to make is, if you can see here really closely, and I don't want to go into too much detail on this because this is ultimately something we're talking to a lot of members behind the paywall about. We are looking at healthcare, and so I'm going to quickly open up healthcare, and then I'm going to go back to this in a second. But if you look at healthcare as a sector, and I'm just going to bring it up like this so you can kind of roughly see what's going on. But healthcare as a sector, and it's a bit of a badly constructed in sort of index or ETF. You can see that basically since September of 2024, so for more than a year, the healthcare sector has done nothing, right? So it's basically underperformed. So this is where it was in September of last year. It's now up. If I were to go back, to early November of last year, if I were to make that the year-over-year comparison. But even so, it hasn't been a big performer. In fact, I'm going to show it to you from a sector perspective in just a second. But if you look at it, I'm going to show it to you this way. If you look at XLV, for example, and we compare to that, let's say the S&P 500, which of course is the index that these sectors are in, although they're very small, as you guys know, because again, it's all tech. But if you were to compare that, you can see while the S&P started breaking the fresh highs in the summer, healthcare is not even back to where it was, in March, right? And certainly not where it was, again, a little bit more than a year ago. So you're seeing this divergence. Now, if you look at this from a year-to-date performance perspective, and the best way to do that is by looking at the sector performance from a percentage return perspective, you can see that year-to-date, the leading sector remains tech. But healthcare, it's up nicely. This one here is up 11%. So it's kind of middle of the pack. In fact, it's exactly middle of the pack. And so we actually think that healthcare has a pretty good shot here to go higher. Biotechnology stocks look good. I'm going to reserve some of that for our members. Don't want to give it all away for here, but that's something that we're looking at. Speaking of technology where things are maybe a little bit challenged, I would like to show you what something like CoreWeave looks like. So this is one of those stocks that continues to be in the headlines, and a lot of people have been very excited about the name. The reality is, just purely technically, without any smart sort of technology overlay, it's just acting really weak. And I think this is one of those stocks that hasn't really made it into the mega cap universe, clearly, of tech, which is why it's getting sold around the fringes. The real wave of selling in the NVIDIAs and those sorts can't come until NVIDIA has reported its earnings, even if it comes there. Right? I'm not making a forecast, so just hypothetically. But you need deep-pocketed pension funds and other people to basically de-risk that entire sector. And they've done some of that, but clearly not enough to dent anything. CoreWeave is also now in a bearish momentum play. So I'm going to quickly show you this. For those of you guys that use our momentum indicator, you will notice that CoreWeave is now in a new momentum sell signal. In fact, we got that momentum sell signal on November the 4th, and it continues to go lower. I mentioned that yesterday in our Trade Ops members area. That's our chat room in Slack. And I think at this point we can trail this lower using that purple line right there. That's our trailing stop. Okay, which gets me to commodities a little bit more. If you look at gold from a momentum perspective, we actually had a bearish momentum signal on the 4th of November. I think I even mentioned it here. That very quickly got stopped out. In fact, it got stopped out on 2 days ago. And now we have a new bullish momentum signal. So it looks to me like the odds are for gold to now push higher. It won't be linear. It won't be without hiccups. But the trend, which we continue to reiterate, the trend on gold, which is here, I continue to mention this as well, has remained in place, undisturbed since January of 2024. So now we have a trend that's been in place, right? So that has never changed, right? It just got very overbought in the short term, which is why I personally sold most of my gold. I'm gonna slowly get back into it. There's plenty of time here. No rush. But from a momentum perspective, near term, you can see our momentum indicator now has gold, GLD, in a new bullish momentum phase. So that's that. Vandenballs is asking, what about RSP? So RSP is the equally weighted S&P 500 index. So equally weighted S&P, just for those people who don't know, let me just quickly reiterate. It's essentially if you weight each stock and sector equally, or each stock, right, in the S&P, and that index is up, nicely the past 3 days. In fact, up about 2%. But again, I think it's going to be it's going to be challenged from a sentiment perspective. I think the asymmetric risk here is that I think my humble opinion is I think people have this vision that the stock market, the S&P, or even the equal weight can go higher if tech doesn't go higher. The regular S&P, so the SPY, SPX, that has, in my view, almost no chance of going much higher unless tech participates. The equally weighted doesn't have much of a chance either, because if large cap tech doesn't participate, the algorithms are largely risk off in general. So it's very difficult to imagine a scenario where equally weighted has a dramatic run and the regular S&P goes sideways, right, or down. I think that's extremely unlikely. And even if it were to happen, it just doesn't seem like a very juicy trade, right? Last but not least, quickly on the energy sector, the XLE ETF is what we're looking at there. Maybe just for perspective in terms of where we are year to date. And of course, we are here now quickly approaching the middle part of November here in a week or so. But the energy sector is also, just like healthcare, smack dab in the middle in terms of performance year to date. And what we saw yesterday was exactly what I just mentioned, right? Which is we saw an awakening of some of the value parts of the market, right? So I'm now telling you the same thing, just showing you charts. If you are in the business of drawing lines on charts, which help for perspective, then, and I've been drawing this line here for a long time, you will notice that we've got maybe something a little bit like this, right? You could imagine this is sort of an inverted head and shoulders pattern if you like to kind of, swing that way. But also, we just have a really, really long-term sort of, not unable to overcome, the 2014 highs. And so, that is going to require things like Chevron and ExxonMobil to participate. But I think there's a lot of tailwinds here for the energy sector as we head into 2026. So those are some of the things that we are watching here. I hope this is helpful for everybody. We'll be back here tomorrow morning. Tomorrow morning, we are going to be doing our Ticker Thursday. So I'm looking forward to that. And a little bit later on today at 11 o'clock Eastern, so that's tonight, 8 a.m. Pacific, we are going to be talking about how to identify when major trends start and when they end, okay? So that's something that we're going to be focusing on in our session at 11 o'clock. So if you haven't had a chance to join that, in fact, let me quickly give you guys a link for that. I think I have it here ready. I'm going to type it into the chat box. So that's thestudytrader.com /event. There you go. That should hopefully get you to that event. What is a rare earth ticker? There's a whole bunch. I mean, it's a bit difficult to kind of just go for one of them. This is for Ben, who's asking. One of them is REMX. So that's the VanEck Rare Earth ETF. If you're looking at that one, REMX is one of them that you could look at. So, all right, folks, we'll see you guys back here tomorrow morning for Ticker Thursdays. All of you guys that are members of Trade Ops, we'll see you in a few minutes in Trade Ops. And of course, again, we're holding that very important session today on how to identify when major trends start and end, how to identify that, which is really the most important thing we can do as traders investors. That happens at 11 o'clock Eastern, 8 o'clock Pacific this morning. We'll see you guys there. Until then, be well, and please give us a thumbs up, like, subscribe to the channel, and I'll see you tomorrow.